Compass Mining is your trusted partner in Bitcoin mining. Whether you're investing in one machine or thousands, our customizable solutions are tailored to meet your needs. We are your experts in Bitcoin mining, offering a platform where individuals and businesses can purchase hardware, host machines, and access a range of ancillary Bitcoin mining services. We also specialize in large-scale site development and data center operations. Discover more at compassmining.io and see how we can power your success today. Hey miners, welcome back to the channel McNallie Money, the official home of power mining analysis. Tuesday morning, really a continuation of exactly what we saw in the markets yesterday. Bitcoin continuing to flounder in the $83,000 range, and the miners have pulled back dramatically, with many of the top companies we cover on the channel now down double-digit percentages. That's what we're going to be talking about in today's presentation. In addition to that, we just received February production results from DMG, Riot, and Mara, plus some interesting IPO news from CoreWeave in relation to the Core Scientific situation. A lot to talk about. Before we get into it, take a second, smash the like button, you guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below. Are you starting to panic? Are you continuing to buy? What are you doing with your Bitcoin mining positions? And how are you feeling about the overall market sentiment heading into the remainder of 2025? Now, with that being said, let's get into today's video. Okay, guys, so that's right. Tuesday morning, Anthony, we were preparing this podcast. It looked to be a dismal start to the day. As I mentioned in the intro, miners down double-digit percentages, Bitcoin showing weakness. But different to what we saw yesterday, we're starting to see a little bit of a recovery, especially in the Bitcoin miners. We're going to be talking about this interesting trading, some of our observations, and of course, February production results in today's podcast. But I wanted to kick things off with a couple Bitcoin price charts here. This was as of this morning in the $82,700 range. If you look at this chart, you see some very odd trading, a big trough on the left, a big spike on the right, obviously trading on the Trump crypto strategic reserve news, but definitely seems to be some manipulation or unique trading patterns compared to typical charts.
Yeah, I mean we've witnessed some real volatility this last week or so. All that week we spent in New York, the price was volatile. The Bitcoin mining stocks were coming down. That announcement on Sunday really sort of put the Bitcoin price, which remember is it trades 365 days a year. So the markets don't trade 365 days, but Bitcoin does 24 hours a day, 365 days a year. So that news came out and immediate impacts. And you can see that on the Sunday there, where it went from 85,000 to 95,000 in a matter of hours. And we were just like scratching our heads as to why the movement was so quickly, And then obviously the tweet was revealed then by the president to say that he wanted a strategic crypto reserve and announced 4 or 5 of the coins alongside Bitcoin that would go into that reserve, and all those coins literally spiked the day. We talked about Cardano being 60% up on Sunday. Bitcoin was double digits. Ethereum was 20% up on Sunday. But what we had yesterday was we had obviously the tariffs coming into play, and the announcement of the tariffs that would come into play in the likes of Canada and Mexico and other countries that provide a tariff towards the US. He was going to reciprocate that on goods going back to those countries, and that spooked the market yesterday. We saw the Dow and the S&P, the NASDAQ all dropping yesterday, and they continue to drop today. So really, we've talked about this before. Bitcoin has had quite a close correlation with the NASDAQ over this past sort of 15 months. And no reason why it wouldn't carry on yesterday. So, we saw those highs in 95, and we've seen today that the Bitcoin price dropped to 82, albeit a slight recovery as we're going through this podcast.
Yeah, it's great you bring up the correlation to NASDAQ and that larger tech sell-off. Now, obviously, Bitcoin and the miners don't operate in a vacuum as an industry or sector. However, compared to a lot of other industries, Anthony, at least on the Bitcoin mining side of things, they are relatively insulated. They don't need a customer, they don't need a sales team. They can sell or hodl their Bitcoin at will. And as we've talked about with some of the CEOs, whether you're talking about the HPC opportunity or the Bitcoin mining itself, any potential tariffs would be universal across the board. So all of the miners, for example, would be hit with an import tariff on mining rigs. All of the HPC players potentially hit with an import tariff, which would essentially lift the price across the market. So compared to other sectors, as you're seeing in the market right now, continuing to sell off. However, in our opinion, Anthony, the Bitcoin HPC space relatively well insulated compared to potential others. Now, another interesting chart here. I drew this on just about an hour ago before the podcast. A nice line you can see here tracing back similar Bitcoin price to where we're at right now, the 82, 83, $84,000 range back to that November 11th week, right around the election, and some of these initial promises we started to hear out of the Trump administration. So, looking back now over the past few months, we've seen the appointment of Senator Loomis, we've seen some detail about this crypto strategic reserve. As you mentioned, they're now actually listing the name of each crypto that will be included in that reserve. We've got some very key players in the White House staff, including RFK, David Sachs. So a ton of positive catalysts. As you say, Anthony, really no major negative news aside from maybe some DeepSeek FUD. However, the price of Bitcoin retreating very similar to before any of this occurred.
Yeah, we've had a lot of positive news over the last few months, ever since the election, ever since the mention of a strategic reserve back in Nashville last year, when both Senator Loomis and the president took to the stage to talk about their views on going forward and what would likely occur within the first 6 to 12 months of his administration. The other thing that's been going on in the background as well is the hard work that the states have been doing, and they've been aided by the likes of Dennis Porter and the Satoshi Action Fund, who've been working strenuously to get some of these bills passed at a state level for a strategic reserve. And we've seen now, upwards of 20 states already going through the process. Yes, there's been a few that have gone through and had a no at a second reading, which means then it's really a no going forward. But there are a significant number that are very, very close to getting approved at state level, and Utah and Texas and Arizona look like three potential states who could rally now for the first state to get that approval. And I think that will just be another marker to achieve. We talk about aims to achieve things in the future. We wanted to get the ETF approval. That was a marker. We've seen the amount of Bitcoin these ETFs have rallied through over the last 15 months. Significant amounts of Bitcoin, far more than anybody ever anticipated. I mean, within the first 2 months of the Bitcoin ETF, it had already surpassed 2 years of the gold ETF. That just tells you that the interest in there, 50 million Americans have some sort of cryptocurrency in their wallets. And, again, a lot of other countries around the world have, probably similar percentage size of their population also have it as well. So, the adoption is gradually growing, and we've seen that reflected in the price over these last few months. This last few weeks has seen a dip, but bear in mind, go back to previous cycles. There were 6 or 7 drops of 30% in those cycles, and we've not had a 30% drop yet. So, if we're following cycles, expect these big drops, but also expect the gains to go with it. If you can't take the drops, you're not going to be ready to take the gains in Bitcoin, and we've said that as well. So, yes, it is trying time. We want Bitcoin price to go. And if you think just over 2 years ago, the Bitcoin price was $15,000. And look where we are today. We're moaning about the price only being 82,000. That's a 500% increase in that price from December 2022.
Yeah, it's interesting you bring up the number of Americans that actually have exposure to crypto. We heard from Anthony Scaramucci in New York last week, Anthony, talking about this prior election and the lead up to this, whether or not he thought Donald Trump truly was aligned with Bitcoin. And he essentially said the Republicans saw an opportunity to capture a lot of single issue voters, and that's maybe where some of the Democrat policies faltered. So it'll be interesting to see from a bipartisan position here how this all plays out, especially at the state level. Dennis Porter now said he's working with both sides of the aisle to push through these state level strategic reserves. So interesting to get some different input there. Now, the next slide we wanted to bring up is the miner update itself. I said in the intro we had some double digit retreating this morning. A couple of the top miners, including Wolf and Cypher, with HPC AI exposure, or at least anticipated exposure, pulling back dramatically. Now, as you mentioned, Anthony, we are starting to see a little bit of recovery here. A few of the miners are in the green, which is nice to see. You and I were both able to make some purchases this morning. How are you feeling about the miners themselves in response to all this volatility?
This last few months has been disappointing. If you're holding mining stocks, there's no doubt about it. I looked today at the drop in the last 3 months period, and it's been quite significant. But before that, we'd seen a big rise over the previous 12 months. So you've got to take those the drops as well as the gains. Today we've seen volatility. When we started planning this podcast, every miner was in the red and significantly in the red. Quite a few of them were double digits in the red. I'm now looking at the live prices now, and there are four in the green there, led by Bitfarms, which is 2% up, Marathon, Digital also 2%, and Soluna in the green as well. And a lot of those miners that were double digits down are starting to recover. So Core Scientific, that was close to $9 a share this morning. Now it's 9.69. So yeah, so a bit of recovery across the mining stocks as we see there, but we know that hour by hour things can change very quickly, and so take caution in buying at the right level here. It's a challenge, at the moment with the Bitcoin price unpredictability. The mining stocks are more volatile than the Bitcoin price. But I would say now there are some value stocks out there. We've just been looking at some of the hodl values of some of these stocks, and the hodl value of DMG is greater than the actual market cap of the company. So, effectively, they could sell all their hodl, recover their market cap, and they've got then all their facilities, all their miners, everything else that they do is like, what value do you put on that as well? So, and Marathon as well, 83% of their market cap is their hodl today. So what we've seen is the share prices have dropped, the valuations of the companies have dropped, but they fell more than the value of Bitcoin's dropped. So their hodl values are starting to be a larger percentage of the market cap in total.
Yeah, I'm glad you brought up the market cap, Anthony. I'll bring up a view on that. Take note here, you guys, because we have seen some heavy retreating in terms of the multi-billion-dollar market cap club. We're going to bring up a comparison in a second here to one of the key data center companies or REITs, Equinix, and their market cap. But we wanted to kind of compare and contrast as we've seen some big reductions here over the past 3 months, Anthony.
Absolutely. And we've seen, when the volatilities occurred, the pure play miners look to have been hit harder than some of the miners that are actually pursuing a HPC solution for part of their power, available power output. So Core Scientific, yes, we've seen the price drop, but we haven't seen that price drop anywhere near where the likes of CleanSpark and Marathon Digital have dropped. Those two share prices have dropped significantly more over the same period of time. Because at the moment, those two are effectively pure play. Yes, we know Marathon are probably interested in doing something in the future. They've got a couple of directors on the board now who've got HPC experience. Zach in New York was adamant again. He's not going to go down the HPC route. He thinks there's enough business in there for CleanSpark to increase their hash rate, be better at mining, and make their business model all around Bitcoin mining. Time will tell on that solution there, but I think the market is certainly giving a little bit more credibility to those mining companies that are doing a HPC strategy.
They most certainly are. So let's talk about a few examples here. Core Scientific is one you and I have talked about quite a lot on the channel. They came out with earnings last week. We're looking to have Adam on shortly to talk about those numbers. However, they came out with a couple big statements in that press release, one of which talking about the additional upsize 70 more megawatts to the CoreWeave deal. Now, you and I, Anthony, in New York, had talked to many analysts, investors in Core Scientific, and they had said, if you get an opportunity, can you just ensure or ask Adam how certain this deal is? So seeing that upsize was obviously a huge vote of confidence. Now we've got some news coming out that CoreWeave itself may be filing for IPO. This is obviously a big step in the right direction in terms of financing and funding levers, as they would now have opportunities to leverage the capital markets.
Yeah, absolutely. We've talked incessantly about this CoreWeave deal with Core Scientific, the largest in the Bitcoin mining space at the moment. Significantly higher than the likes of TeraWulf, IREN, Bit Digital. Although Bit Digital, do have the largest HPC currently in operation, but this deal with CoreWeave, 590 megawatts, $10 billion of revenues over the contract term, which currently is 12 years, with two 5-year options to extend. So potentially 22 years, potentially probably $20 billion contract. And the great news today is, which will put certain minds at rest, is the fact that CoreWeave have decided to, as expected, start going through their IPO process on the NASDAQ. That will give them the ability to raise additional funds to actually, meet some of these contracts. I mean, this contract deal with Core Scientific is just one of many. They're also looking to invest, a further $10 billion in the UK in driving HPC over there as well. So just two of many contracts that Corp are probably doing that. And to do these contracts, they're going to have significant capital, and by this IPO, they'll raise more. Now they have raised over 12 billion since they incorporated through many of the largest funds like BlackRock and Co2, some of the early investors in CoreWeave. So I'd imagine when they start allocating some of the shares at the IPO, we'll see some of these big original lenders have probably significant parts of CoreWeave for giving that significant borrowing at the start of the process.
Most definitely. And keep in mind, you guys, this is a company that's down 25% over the last month. Again, despite all of these positive catalysts, not to mention their Bitcoin mining business, Anthony, which continues to purr along, getting those daily updates out from the Core Scientific team. And the next slide I wanted to bring up is actually a look at Equinix here, Anthony. This is another major data center player. You can see they actually throw off a 2% dividend yield. So that REIT category, we've actually heard some of the Bitcoin miners potentially look to merge into down the road. Interesting, this is a $900 stock, currently given a market cap in excess of $86 billion. 105 PE. You talk about some of the multiples assigned on the Bitcoin mining versus HPC side of things. However, again, we're just not seeing anything close to this reflected in the multiples being assigned to these Bitcoin mining companies.
Yeah, I mean, when you speak to the analysts, and we spoke to many analysts last week in New York, and we were, asking them to give us their view on certain stocks, the ones that are HPC related. They were talking about a 15 times P ratio would be a prudent way of looking at it, and actually, potentially should be higher than 15x. But even if you took a prudent look at the ability that Core Scientific are going to achieve in the next 12 years, where they're going to average, well over $600 million dollars in profit per year. Multiply that by 15, that gives you 9 billion market cap just based on the HPC. They've also got close to 20 exahash, which by the end of Q3 will start to be refreshed using all the chips from Block. And then, what value do you put on a mining company with nearly 20 exahash? That's got to be probably another $2 billion in current climate. So you're looking at a company that is today valued at just under 3 billion, but potentially should be valued probably closer to 11 or 12 billion using a very low P ratio, especially in comparison to Equinix.
Yeah, no kidding. Looking at that 105 PE. Now, if we look at the actual business units behind this share price, Anthony, you can see they've got a goal of 700 megawatts of capacity, 7.5 billion of investment in their X scale program. So even compared to Core Scientific, looking at the size, scale, capacity of these two companies, quite interesting there as well.
Yeah, absolutely. Although, I mean, the one difference will be is Equinix will have the GPUs within that 700 megawatts of capacity, whereas Core Scientific are providing a hosting service. So let's not get ourselves running away with it all at the moment. But it does highlight a disparity between valuations because they're giving the fact they've got GPUs there, an additional 6 times the amount of P ratio that effectively Core Scientific should be having, which isn't even having at the moment. So you think of the scale Core Scientific will have in the next 18 months in terms of HPC, 590 megawatts, a further 140 megawatts supporting that. They've got another 300 megawatts that they want to look to scale up further in HPC. And then they're going to dedicate the remaining 400 megawatts to Bitcoin mining. So that will get them, to 20, maybe higher than 20 when they start refreshing some of the older chips with newer chips, more efficient chips that are able to mine Bitcoin, like we've seen the likes of IREN and CleanSpark do in recent months as their efficiency's gone down. We'll see that also occur with Core Scientific. But it's really, an opportunistic moment for them. I don't think the market's fully factoring anything in for Core Scientific. It looks like it's just been literally valued on its Bitcoin mining business and a small amount maybe towards HPC.
Yeah, you're certainly right. Now, it's a good point you brought up about the powered shell model versus the vertically integrated owned GPU model. So you mentioned Bit Digital as the company that has the largest current active revenue contract. I wanted to bring up their business model as well, Anthony, because even if you look at companies that are going the more GPU route, again, the multiples here just don't make sense to us. Bit Digital signed another multi-year co-location agreement just a few weeks ago. We had Sam on the channel talking about that, the launch of white fiber. And if you look at their roadmap or their expansion plans, 280 megawatt pipeline, again, compared to some of these other sectors or other companies operating in other sectors, it just appears we're being misvalued. Compass Mining makes Bitcoin mining accessible to everyone. Start mining in as little as 48 hours with our turnkey hardware, online and mining directly to your Bitcoin wallet within 2 business days. Find out more at compassmining.io and get started now.
Yeah, absolutely. Today's valuation, Bit Digital, probably close to 350 million. When you consider what they've got in their treasury fund, there's a significant amount of Ethereum and Bitcoin in their treasury fund there. This expansion into HPC has been something they've been doing now well over 12 months. They've actually ramped down their Bitcoin mining. They're looking to get to about 3 exahash. But if you think back to 12 months ago, they were probably at 3 exahash 12 months ago. So they've stopped mining with some of their older machines, and they've started to bring in some new S21s in an incremental way. So they'll grow that to 3 exahash maybe by the end of this year. But their focus is really on HPC, and they've now started to, in the last few months, start to buy their own facilities. So if you think back to a year ago when they started in this space, around about the October 2023, when they made their first announcement and jumped everyone in the HPC space because they signed this initial deal for 35 million, which grew to 50 million. And they've grown that contract of annualized revenue now, and it's imminently getting very, very close to their target of 100 million. In fact, I expect the next podcast that we have Sam on will be to say they've achieved 100 million, because it was very close on the last podcast. So they're signing lots of contract. It looks like at the moment their data center existing capacity is at 4 megawatts, which might not sound a lot when you hear the likes of Core Scientific with a 590 megawatt deal, but this is 4 megawatts of compute power. This is a significant amount of compute power. They're going to grow that to 12 by the end of Q2, and then to 32 by the end of this year, with potential to then get to 80 megawatts in data center expansion by the end of next year. So, they've got a roadmap out there, quite clear, and everything that Sam said at the moment, he's pretty much achieved. He does keep very transparent about the business model that they're using there. They were hoping to get the 100 megawatts by the end of the year. Didn't quite achieve it, but he's basically came out in the podcast earlier this year and said, imminently about to get there. They've signed so many customers in the last few months. I think they've over 20 different clients at the moment, so they're really growing out the business. And he looks to be fully focused. He's already renamed the HPC business into White Fiber. He's even suggested that he might even spin off the Bitcoin mining business just so that the market can focus on the HPC, because he believes, and we believe too, when you look at the valuations, that he's not getting any credibility at all for his HPC business.
No, it's a great point you bring up, Anthony. And if you think about the greater market here and the general public, we obviously talk about Bitcoin mining day in, day out. Most people don't even know what Bitcoin is, let alone what Bitcoin miners are or do, and the fact that these are publicly traded companies that have other business divisions, HPC, AI, ASIC manufacturing, whatever the case is. So when you really peel this back, Anthony, the level of market understanding towards these companies, I think just simply isn't there. And some of the investors we talked with in New York, they said their biggest gains, their biggest percentage returns happen when you understand an industry before Wall Street does. So very encouraging. And as we say, the miners starting to even bounce back during the podcast here. Now, we've spent the opening half of the podcast talking about HPC, the multiples, the valuations, and this potential opportunity we see. The whole other side of the coin for these companies is the Bitcoin mining, the real bread and butter, bringing in the revenue currently. So we also have some great production updates out for the month of February. We're going to kick off with Riot Platforms. They've started to express interest in HPC AI, but again, a massive hodl, a ton of Bitcoin on balance sheet, and improving operational metrics.
Yeah, and another good month for Riot. February's a 28-day month, so don't expect the Bitcoin mine for any of the miners in February to be greater than it was in January, unless they've added significant hash rate. Riot did add both operational hash rate and installed hash rate, albeit it was literally fractional above. But in terms of Bitcoin mine, 470 Bitcoin, that's an 11% drop on last month there. However, they were also able to achieve an extra 33 Bitcoin in power sales. The sales that they receive for curtailment and following these demand response programs, 33 Bitcoin. They achieved 41 Bitcoin in January, 4.2 million in January, and 2.8 million in terms of power credits for the month of February. Now, we'll probably see that continue to drop until we get through to June. And then between June, July, August, September, that's the 4CP program. Then we normally see in previous periods that they start ramping up there, because those are the warmer months. And if the domestic demand rises because of things like air conditioning, etc., like that, then the miners will also spend time curtailing. And Riot will do it, the Corsicana site, because they're using market rates. And as soon as the market rates spike, they'll switch off the machines. What you highlighted quite clearly, that their biggest asset at the moment is the size of their hodl. And again, they grew their hodl by their total Bitcoin miners. So they sold no Bitcoin during the month of February. They've now got 18,692 Bitcoin in their hodl, only surpassed by the likes of Marathon and Strategy, formerly known as MicroStrategy, who have more Bitcoin on the balance sheet as a public entity. In terms of the valuation, The valuation has come down because the Bitcoin price at the end of January was 102,000. So your January hodl multiplied by 102,000 versus your February hodl multiplied by 84,000. That's a significant distance. That's a significant amount there. So even with an increased hodl, we've seen that value come down by 15%. Now, I also put in a statistic about what does that hodl look like as a percentage of the market capitalization. If you look at where we are in February now, because the valuation of Riot has dropped in recent weeks, that hodl now has a 55% value of the total market capitalization. So that's a significant value when you consider that they've got two of the largest Bitcoin mining sites at the Rockdale facility and Corsicana in the world.
Yeah, another great update from Riot, Anthony. And what I love about these monthly production reports are these images we're getting out of Corsicana, just a behemoth of a facility. And you can see some of the initial groundworks continuing there at this location, despite the uncertainty right now between HPC or Bitcoin mining.
Yeah, when we went for our visit last June, only the facility on the right was fully completed. They started one of those buildings on the left-hand side, the nearest building to us. That's building B1, and they basically just put up the infrastructure of that building there. There was nothing inside, so they've done a hell of a lot of work since June, and obviously you can see now the space to the left of the facilities there looks like that's getting ready there for further action. But listening to Jason when we were in New York, Riot's priority now, which we've articulated on the podcast recently, they've done 180 roundabout turn, and they're now saying that AI and HPC remains their top priority, and they're seeing a strong demand in the market. The Corsicana site itself presents a really unique opportunity to access up to that 1 gigawatt of power by 2026 in near proximity to the tier one data center market of Dallas. So Dallas is literally only about an hour's drive away from Corsicana. So perfect positioning for a site there. It's currently being evaluated for access to power, to water, to fiber, to make sure that they can process the right HPC deal going forward. But everything looks on track. Jason felt really positive about it, and acknowledged that in June when he said they were not going to go down HPC, really didn't have all the facts in front of him at the time. There, bear in mind, literally only the week before, Core Scientific had announced their deal, and it hit the market on the run, really, because nobody expected a deal that size. 200 megawatts was announced, and it was the first significant deal. Obviously, it grew from then, and I think as every other man has looked at that deal grow, even the hardened true blue Bitcoin miners are sort of saying, actually, there might be some credibility in looking at allocating some of our spare capacity power towards HPC. And we've seen about 90% of the Bitcoin mining market certainly look to do that. So Riot looks like they made the right decision. I've spoke to the analysts. They're very keen now and focused on Riot achieving this. Obviously, you can see the site there. There's a lot of work already been done in comparison to some other sites that we've looked at, where there's still a lot of work to be done just to get the ground developed, ready for building. And it looks like Riot have done a significant amount of work in preparation. And over this next 12 months now is getting the right power conduits in to deliver this HPC business, and then roll out 600 megawatts of HPC tier one data center to the city of Dallas.
Yeah, I'm glad you brought that up. And you can tell even by the presentation deck they put out for that earnings, very much focused on HPC AI, and some great slides in there talking about the opportunity really at both of their facilities, being Rockdale and Corsicana. Now, you just mentioned, Anthony, the percentage of Riot's market cap expressed in terms of their HODL. The next one we have, DMG. At the time this was taken, the end of February, 99% of market cap was expressed in HODL. Today, they've actually overcome that milestone, as you just mentioned. So this is another very interesting player involved in the Canadian Bitcoin mining landscape here that definitely could be worth a closer look.
Absolutely. DMG, probably one of the oldest miners out there. Sheldon, one of the longest serving CEOs of a mining company, built it up from scratch. And also at the same time, when he was building DMG, helped build other facilities for other miners as well. So, he knows what he doesn't know about mining. It probably isn't worth knowing. He's an expert in the majority of fields. They even got their own mining pool. They created the Mara pool. So they've got so many, attributes that people just take for granted. But in terms of their operational update for February, they mined 27, again, 13% reduction on January based on the fact that they got 28 days. Again, slightly increased their energized hash rate to 1.81. Total operational hash rate for the month was slightly less, maybe a little bit more curtailment during the month of February than January. That's a 2% reduction. Total power for the site at Christina Lake there, I think it's an 80 megawatt site, but they're operating at 65 megawatts there. Their efficiency is remaining constant at 23. That was helped by the introduction of those S21s recently received. In terms of selling Bitcoin, they've been able, this last few months, they've been able to sell some of the Bitcoin to pay for their operational costs and add the rest of the hodl. So this particular month, they're able to increase their hodl by 12 Bitcoin to 443. That's got a value as at the end of February 28, when the Bitcoin price was 84,000 of 37.3 million. And as this slide was done just before market open, that was a 99% value compared to the market capitalization. Well, during the podcast, we've noticed that it had actually increased to 102%. And if I look now at the live chart, it's 104%. So Bitcoin price, over 85,000 now. But the fact is as the Bitcoin price is seems to be making a little bit of a rally from its lows today, we're not seeing that reflected at all in the miners. Some of the miners who are down double digits have slowly clawed from that back, but there still remains only 4 miners in the green today, even with the Bitcoin price having moved from 82 to 85,000.
Yeah, really music to your ears, Anthony, if you've got that long-term conviction and time preference as we do in this space. Now, I did want to bring up with DMG as well. They just came out with Q1 earnings. We're going to be having Sheldon and Steve on the channel tomorrow to talk about the earnings in more detail. They're also partaking in this HPC story as well. So not only does their current HODL surpass their market cap, they just inked an MOU with the Malahat Nation here in Canada for 30 megawatts of HPC AI infrastructure, along with another MOU for up to 10 megawatts of data center infrastructure. So again, when you start to piece out or take these companies in sections, definitely some interesting valuations to say the least. And as you just mentioned, Anthony, the team at DMG responsible for the Mara pool itself, and that's the next company we have to discuss in terms of February production.
Yeah, so they released their numbers today. Bitcoin mined 706. Not surprising, they've got 53.7 exahash of operational hash rate now. That's an increase of 1%, but their Bitcoin mined again dropped by 6%. That was, due to the fact that they had obviously 3 days less mining. Now, one thing of note there, their efficiencies improved yet again this month for the mining. It was 20 back in December, went down to 19.4 January, and now in February, 18.8. So that's moving in the right direction. That will help the power cost of mining a Bitcoin. Marathon brought out their results recently, and they weren't the cheapest to mine a Bitcoin in terms of energy cost. Because they have a higher cost than some of the other miners, they're not achieving the level that the likes of Cypher or IREN can attribute to, which is around about 3 cents. But having that efficiency rate does help them. If they can get the power as well down as they purchase more sites and don't pay a hosting fee, that will help them in the long run as well. In terms of Bitcoin mined per day, 25.2 Bitcoin compared to 24.2. So they're actually mining more Bitcoin a day now. January's figures weren't weren't in terms of comparison to the miners wasn't a great one. So there's been an improvement there. The gap's closing. Still a bit of a gap to the top performers like Bitfarms, like Hive Digital, like IREN, and like Riot at the moment. Riot have been putting out some really good updates this year, far superior than what they put out in 2024, where we were scratching our heads for half that year and trying to understand where there was a big gap. But they seem to get their act together. Marathon stands out from every other mine, though, in terms of not only the hash rate, but their actual hodl. I mean, they've got more than twice as much Bitcoin as the next miner. I'd even go as close to say they might have as much Bitcoin as the rest of the miners in the table added together. But they've got 46,374 Bitcoin as at the end of February. That's got a valuation just under $4 billion. Now, in January 2025, they had, 706 less Bitcoin, and they had a valuation of 4.6 billion. That's the impact of the Bitcoin price between January and February. And that's a reduction of 16%. And although Marathon brought out some great numbers, which was helped by the obviously the FASB rules on valuing Bitcoin, which gave them a very, very high level of net income for the last quarter. If the Bitcoin price doesn't get above 93,000 by the end of March, you might see some of these miners with hodls start to issue effectively losses for the period, the first 3 months of 2025, because the when the unrealized gain works in your favor, the unrealized loss will equally work against you. And this will happen when you've got a company of Marathon size with the size of their hodl there. It won't take much of a price differential to make that company produce a net loss.
Now, Anthony, I'm smiling to myself. You talk about the price differential between January, February, March. I'm looking at the price differential between the start and end of this podcast. We're nearing in at $86,000 US now per Bitcoin. So a few $1,000 move just in the short 20-minute podcast. You start multiplying that out by the HODL balance of these companies and just a tremendous amount of volatility. That's what we're here for. And another space you'll see some volatility is Miner Madness 2.0. You and I have worked our way up to the top of the leaderboard, at least at the time this was taken. So to refresh everyone's memory, you and I took the podium for Miner Madness 1.0 Q4 of last year, looking like we're in good position to potentially repeat that outcome. So, Anthony, I'll give you a final word here, but interesting market. We plan a big upbeat podcast yesterday. The miners and Bitcoin tank. Today, we're feeling a little bit down. We plan a negative podcast, and Bitcoin and the miners recover during that podcast. So your guess is as good as mine, but I'll give you a final word.
Yeah, I mean, I'm just looking at the leaderboard now. I mean, yes, from the analyst leaderboard, I'm back in the lead again for the second time this period, but things change so often. I mean, last week's leaders were Unbiased and Agrippa Investments, who actually hold the same three stocks in order, different Bitcoin prices, so that will separate them at the end of the competition. Volatility will change this leaderboard on an hourly basis, never mind a daily basis. But it's nice to sort of to celebrate these occasions when we're sort of up there in the top three, both of us again. We were the top two last time in the analyst leaderboard. Maybe we have to sign off on the next competition. We don't want to keep doing that analyst leaderboard, but it's all been a lot of good fun. And one thing it has done is it's attracted a large number of people to the website. Believe you me, there's more than the data from the competition on the website. Go and have a look at it. We've been updating the website every day since we started our mining analysis. There's so much information on there now. All your best miners are on the website itself. Have a look at. We've even got live margin for Bitcoin miners, so you can look at your own mining company there. We've got the power costs in there. We've got the efficiency in there. We've calculated what their hash cost and hash price will be to give you a sort of a margin. So you can look at that data there. All the operational metrics are on the website as well. All the interviews, all the articles, all the podcasts, they're all there to access as well. You can see all the latest ones on there, as well as, if you want to listen to the podcast on the way home, then just dial into the, Spotify or Amazon or Apple and 14 other platforms. You can listen to all our podcasts through all those mediums as well. And believe you me, the numbers are going through the roof for those app pod for the podcast situated on the apps. We've been doing really, really well. We only started that in April last year, but the actual increase has been monumental over that sort of 8, 9 month period. We're attracting a lot of people now. And bear in mind, when the Bitcoin price is down and mining stocks is down, people sort of, some investors will move away to try and look at other areas to try and recoup some of the money, maybe go into, AI stocks or into maybe more safer stocks like gold stocks at the moment have been doing very well. So Bitcoin and Bitcoin mining, the movement of people, the retail investors can move in and out of that space based on the Bitcoin price, because Bitcoin price will lead all the mining stocks and certain proxy stocks that are, something like Strategy that have, significant amounts of Bitcoin on the balance sheet, and obviously the likes of the ETFs. But when the Bitcoin price drops, the people tend to sort of some people move away. Me and you, Bryce, we've been here all the way through the bear market. We're looking forward to this bull cycle this year, and hopefully we'll be able to exit some of our positions as the Bitcoin price and mining stocks rally later on.
Yeah, we're not done yet, Anthony. And as they say, you haven't won or lost until you sell. So we're going to stick it out. We're going to stay with this thesis. But I can tell from the comment section, a lot of people are either leaving or have thought about leaving, at least at this point. The other portion of the website I really like, you brought up some of the features, is the calendar section. You can see all of our upcoming interviews, our travel schedule, and of course, earnings releases for each one of these miners. So a lot of information, a great resource there. And like you say, Anthony, stop by, check it out in the process of checking your Miner Madness ranking. Now, with that being said, we'll be back here tomorrow, you guys. Your guess is as good as ours in terms of what the miners do. We've got DMG, the CEO and COO on for Q1 earnings. Thanks so much for watching. We'll see you back here soon.